I think we can start. The others we join, we can continue. For those who have just joined, we have not started. Let me briefly put my camera on. And hopefully you can see my screen. Just confirm on the chat if you can see the screen I've shared, the presentation. Okay. So today I want us to go through NSE shares trading. It is day 22. All the other videos I've posted, and all these have been free trainings. And today is just a recap of what we have done previously. I want us to learn how to build our investment foundation. When you're investing in NSE, you're not just chasing prices and dividends. You're actually doing investment, and you need to build an investment foundation that can start the prices. Like now, you notice the prices are way too high in some of stocks. There are those which have dropped and have given us opportunity to get in. So where do you start as an investor? My name is Peter Chage. I work with AIB Access Africa. However, all these trainings I'm bringing off AIB so that at least everybody gets access to the training and you're able to trade with a broker you're comfortable with. I bring them under my community called My Wealth Guide KE. Hopefully that community can grow to something good in future. And hopefully I still maintain my promise that all these trainings will be free going forward. Let me turn off the camera because of latency. At the end, if you have any question in between, you can post on the chat. Then at the end, once we are done with the presentation and also some practicals, I'll enable cameras, not camera, microphone for those who may want to ask question directly. So let's go to the presentation. And we'll start with the basics because I don't want to assume everybody understands NSE. It will be just a quick recap on what NSE is. Then we go straight to how you build your portfolio based on the amount that you're investing. So for those who are new, NSE is a marketplace where you buy shares and sell shares. So a company wants to raise money. They come and float their shares through IPO. So let's say a company either wants to pay a debt or they have a project they are doing and they need money. They'll come and say, in exchange of the money you gave, you are going to give us, let us give you our shares. So you give them maybe 1,000. Out of that 1,000, you're given maybe 100 shares or 5 shares, depending on the price of the IPO. So that is the first time the company is listing. A company can also list through introduction. So IPO is where company is coming in the first time. They say, those who want to give us money, these are shares, just buy directly from us. So you give the company money directly. Then there are those companies where shareholders already exist. People have been buying off NSE, like Family Banker, where you go to their office, you tell them I want to buy shares, they'll give you a form which you take to NSE and you are allotted shares. That's called over the counter, where you, just as the word says, over the counter, you go to the counter and buy shares from there. Now, when this company wants to list in NSE, they will not do an IPO. They usually do listing by introduction, where you as the people who bought over the counter want back your money. So you come and float your shares and you say, I want my money back. Are you able to buy these shares from us? So IPO and listing by introduction. Now, when these companies list at NSE, remember you have given them money. You may need your money back. What do? You can't go back to the company and tell them I need my money back. So that's where now secondary trading comes in, buying and selling at NSE. So purely NSE is where now you as the existing shareholder, you want your money back. Instead of asking the company to pay you back, You come and say, I want to sell my shares at this price. And then somebody else will say, I have seen this company is good. I want to buy from you. Can we match the price? If you match, now shares exchange hands and money exchange hands. But everything is done through the system. There is no manual process. So NSE is a marketplace for buying and selling shares. These are companies to raise capital. As I've said, a company wants to pay off debts. Company wants to, maybe to raise capital to do innovations. They'll come and float shares. A good example, Kenya Pipeline. Government needed to pay off some of the debts it owes. What do? They come and say, since we own Kenya Pipeline 100%, why not give 65% to the public and the rest? Then we retain 35. You give us money for that 65%. We go and pay the debts, but you become part of that company. A case also Safaricom. They wanted to do expansion. What do? They come and say, let's give us part of our shareholding. You give us money. And I think part of it was also going to the government. So here you as the investor, when you're buying directly from NSE, either IPO, listing by introduction, or secondary trading like now what we are doing right now. When the market is open, you are buying to earn returns. There have been this confusion in the market that when you buy shares, you're giving the company money. I said it's only during IPO that you're giving company money directly. If you're buying through listing by introduction, that time you are buying out somebody. If you're buying the shares directly from NSE, you are buying out somebody. That is, Peter have shares, you are buying me out. It's the same way. Let's take a good analogy. We have mangoes at the farm. There is somebody who goes and buys those mangoes from that farm. That is during IPO. Somebody buys the shares directly from the company. This person comes to town and says, I can't keep these mangoes. The prices have gone up. I need my money back. What do he or she do? They can't return that mango back to the farm. They will say, let me take them to Gekoba. Then us will come and buy from them. Now Gekoba is like NSE. The farm where you're buying those mangoes from is that now company. The person who bought is the first person who bought during IPO. Now, us who are buying now directly from the market is us who are coming now to NSE. So NSE is basically a marketplace for buying and selling shares. Now, the way NSE started, it's a funny story. NSE started with companies just coming up and they decide, well, we need money. What do? Go and sell part of our shareholding to people. That time NSE didn't have the system. So that time there used to be the people who are given that responsibility by the companies. Those people are called brokers. That's where the word broker came from. They will collect the list of the companies that are selling shares. Then they come at NSE. During auction, they start shouting prices. Those who want to buy, if you match a price with another person, you are put on a register, a book. Then the broker will come to the office at the end of the day, reconcile the details with the people who have paid, go to the company, write the certificates, give those certificates to those people, get money and pay the company. Eventually they realized if we do this, then at one point these certificates can get lost or stolen. What do? They came up with a system, a registry system that is called CDSE. So that's where the CDSE came from. Now they transferred these paper certificates into digital form. Now the shares that we are buying and selling at NSE, the one that you see in your portfolio valuation. After some time, they realized even if we continue shouting at NSE, at one point there may be people who will go behind us and maybe change prices. What do? We come up with a system that matches the prices. That's where now NSE trading system came from. You place the orders, they match. Then they realized even if we have the system, nothing stops people from playing with the prices. What do? Let's come up with a regulator, and that's where CMA came from. Eventually, they realized now clients have to come to the offices. This happened around 2011. Clients have to come to the offices. What do? We can even give them digital access. And that's where the first mobile app and first online trading platform came in with AIB Access, AIB Digitrader. Then we realized if you have access to your phone and you can trade, why not open account remotely? This happened in 2019 when we changed from manual account opening to digital account opening. Yeah? Then we said, if you can open account, then you can also invite a friend. And that's where now referral module came from. And again, we are saying, if you can buy shares on the app at NSE, why not buy bonds? Why not invest in special funds? Why not invest in other products? So these are innovations that have happened over time and have changed NSE from just buying and selling shares to a capital markets operational place. What does that mean? At NSE, it's not just shares that are bought and sold. There are also other products like government bonds. Again, primaries for government boards. I'll do this. Hopefully, I'll check with the group whether we can do boards training tomorrow, or is it Thursday? This week I want to dwell on 4 products: shares for NSE, international markets, hopefully tomorrow. Then we do government boards, how you trade on them. Then we do pension. Government boards and pension, I can tackle them or I break them, so that at least you know what happens in capital markets. So NSE, we have said, for those who are joining, marketplace for buying and selling shares. And you cannot walk to NSE and tell them you want to buy shares. You cannot go to CDSE, you tell them you want to buy shares. There is a way all the market participants work. So we have CDSE, as I said, it's the registry for shares. NSE is the trading or marketplace for buying and selling shares. Then we have the broker who have the role of submitting account opening requests to CDSE and submitting your orders to NSE. Once they match, they are the ones who have the role of settlement, taking your money to CDSE to pay the person who has sold to you. Then CDSE moves the shares. So all operations in NSE are handled by a broker, a licensed broker. These days, there are so many platforms and also, unfortunately, fraudsters who are coming up. Be very, very careful. Always check for a licensed broker. That information you can get from NSE, CDSE, very important, CMA, because they are the ones who license all the brokers, and also CASIB. The reason why CASIB, I wouldn't advise much. There are those who are not a member of CASIB. So there you can get maybe a few who have not joined CASIB. But if you want full list, CMA, the one who licenses. NSE, the list who are supposed to trade on their platform. CDSE, the list who holds the shares. So basically NSE, marketplace for buying and selling shares. For those who are new in the market, hopefully now you understand how NSE works. There is a request on the chat. We can do bots tomorrow. Yes, let's do bots tomorrow. Then the following day we do international market. I will share all these links on the same platform you have seen those links. And feel free to share with everybody out. It's not related to any broker. It's not related to any broker. I want to open up the market for everyone. So then how does market work? Peter have shares. We have said a company wants to raise money. They come and float shares. They say, give us your money, we give you shares during IPO. We apply. We have the shares. The others will go directly to the company, as I've said, over the counter, where you go to the company itself, to their share department. You tell them, I want shares from you, like Family Bank. They tell you this is a form field, take to NSE, stamp, it is brought. You enter into their register. So 2 ways, IPO or buying directly from the company over the counter. Now at one point, you want your money back. So what do? You can't go back to the company and tell them I need my money. Even in circles, when you join a circle and you buy shares, not the deposit, the shares, you have to look for somebody to sell to. It's the same thing at NSE. You have to look somebody to sell to. Remember, the company have used the money you gave them. NSE have made it simple. Company, once you give them money on IPO or over the counter, they allow them now to list. For IPO, it is automatic. On the date they close and they do all the trading, the shares are allowed now at NSE. That is listing. Now, for this company that you bought over the counter, they will just come. It's called listing by introduction. The people who already have the shares now, they come and say, if you want to sell, these are the shares we are selling. They are put on NSE system. We will see all the prices, all of us, and you decide. Peter will say, today I can buy maybe Kenya Pipeline shares. Is there somebody who is selling? Yes. What price are they selling at? Am I willing to pay that price? If I feel that price is way high, I can put my own price and wait. If I feel the price is okay, then I'll just match the seller. They sell to me, money moves. However, as I said, Peter can also decide, let me wait. Then the seller decides, instead of me going back with the shares, why not sell to Peter and is already available? They float the shares to me. Which means what? Demand, supply, buy and sell. There have to be a matching demand and supply for an execution to happen. Two things: you can see the market, you can place a price that matches the opposite side, or you submit an order we call market order, where you are saying, go and pick me anything. That will go in straight and match. And that's where executions happen. Shares move from the person who is selling into the person who is buying. Money from the broker moves to CDSC to pay the person who has sold to you through the broker. And that's where T+3 comes in. Because money have to move from the broker to CDSC. That takes 3 working days to make sure the broker finalizes all reconciliation and there is no amendments to be done. On T+3, 3 p.m., all transactions are valid. At that point, there is no adjustment that can be done. In between, you have to provide justifiable reason. If it is enough, the broker will reallocate. On T+3, there is nothing you can do. Money moves, shares are released to the person who have bought. And at that point, now the broker can pay you. Unfortunately, because it's past closing hours of the office, that's why you are paid on the 4th working day. Now, how do prices move? Prices move because of demand and supply. Me and you, we are buying and selling. If there are many people willing to buy, they will start clearing the demand, the supply. You start clearing the prices up, you push the prices up. On the other side, there are many people willing to sell. They come and start clearing the prices on demand side. They lower the prices. It's the same thing when we are going home. There is a matatu. It's the only matatu remaining, only maybe 2. They can decide, as people come in, let's hike the price because there is demand. What if there are so many matatus and there are only a few people? They will start fighting for you. They will be forced to lower the prices. But in the market, ideally, you are buying out. If you are selling, all of you, you're actually clearing the people who are buying, pushing the prices down. And the same happens when there is a lot of demand. You want to buy, you come and start clearing the shares that are there, pushing the prices up, and prices go up. However, market is protected by 10% rule, where prices are limited to how far they can go up based on the opening price. So you just do 10%, prices can't go above that or below that. Just to protect you as the investor, because if there is no protection, it means you can wipe out the whole market to a zero. Or you push the prices way too high so that market capitation doubles or triples. And trading, as I have said, it is through the brokers, irrespective of the platform. Don't be told you don't need a broker. On CDSC, you need a broker. On NSE, you need a broker. So there must be a broker on any trade to happen. Also, there must be a custodian. So brokers are also custodians. There are also banks which are custodian. Custodian means at CDSC, there is somebody who is holding shares on your behalf, but they are in your name. So again, trading, it is brokers. Irrespective, you have to be a broker for you to trade at NSE. However, at CDSC, the shares are held by custodians. Brokers are custodians for shares they hold for their client. There are banks which hold shares on behalf of their client, and not the banks which have brokerage, the banks which have custody. So they are the ones who hold those shares in your name. But trading, it has to go through a broker. Then how do you buy shares and also sell? First of all, you need a CDSC account. Why do you need a CDSC account? Remember what I said. Initially, shares were held in paper format. Then it was moved to digital format. That digital format is your CDSC account. So the CDSC account holds your shares. So you go to a broker, request to open account. You can do account opening remotely. For the brokers who already have the digital platform, AIB being the pioneer, the rest are just coming after. Or you just walk to a broker and fill in manual forms. So those are the two ways. Fill in account opening digitally, or you fill in manual forms. You submit to the broker. Broker will submit that application to CDSC. A CDSC account is opened. What follows next? Broker may have given you additional form if you're using manual form to open an internal broker account. Or if you use digital platform, that one is opened automatically. That account holds your funds. So there are two accounts. CDSC accounts holding your shares, broker internal accounts holding your money. So as long as you have money, not shares, it means the money is with the broker. If you have bought shares, that money is transferred to shares in CDS. It means broker have nothing for you. It is CDS who have the shares. Meaning what? Even if that broker goes down, you still have your shares. You can move to another broker. Why am I saying this? If a broker goes down, you don't need to even worry. You just need to go to CDSC, follow the procedure of transferring to another broker. Unless you are watching market, never leave money with a broker. It doesn't help you. Let money be in shares because there are dividends and also price movement. So as long as the money is in your account, that money is in broker's bank account. And broker has the discretion of either paying you or allowing you to buy shares. So once you file the account, it is in your broker account. You have deposited in their bank, they have posted in your internal broker account. You can see that credit. The next thing is to buy shares. You just log into the platform or send email. We'll come to that. Select the share that you want, submit to the market, it executes. As I have said, money moves from that broker to CDSC. CDSC moves the money from the person who is selling into your CDSC account within CDSC, not within the broker. So at that point, broker have nothing on their side. It's only that now at CDSC, they are tagged as the custodian of those shares. At that point, you're just waiting either for prices to go up or dividends. If you want to move from that broker to another, you just fill in a transfer form to CDSC, pay CDSC. Broker is not supposed to charge you. They just move now from the broker you have to another broker. And remember, you must have opened account with that broker. It's that simple. So as long as the shares are with CDSC, the broker is at your mercy. Remember, it is you who owns those shares at CDSC. You can do anything you want. If you want to sell, if you want to move to another broker, you are free to do that. So basically, that's how shares are bought and sold. Just open CDSC account, add, place the order. When you match a seller, shares moves to you, money moves to the seller. So then what are the steps? I'll come now to the digital platform once we are done with this screen. We first go through quickly on order entry. The first step is to choose a company. Before you buy any share at NSE, make sure you know which company you're buying, what that company does, whether there is future. And remember, it's money you're putting in. You're coming in for returns. You're not building any company here. Remember, you're buying out somebody who is selling to you at a profit. You need to sell back at a profit. So before you choose a company, think, when I'm buying at this price, what am I looking for? Is it dividend or is it price movement? It must be either of those two. If it is none of those two, you're just packing your money, and the next thing you can do is just lose it. So before you buy a company, always ask yourself, you don't need to do valuations and all those technical analysis. In NSE, it's not that. It's more of what you can see and interpret. As a beginner, don't even try to go. That one leave to analysts. There's a reason why I'm saying this. Leave it to analysts. There is a reason. It is their report is used by fund managers, who again are analysts. So even if they receive, they will also do additional check. You only need to know, what does this company do? Where do they make money from? Is it genuine money? Is it money that can start sometime? Is the company giving out all their profit back? Or are they retaining? Are they growing? All this is just by quick check. Then ask yourself, the price I'm buying at, is it the right price? Am I really buying this share at a high price? Or am I buying at a low price? Am I chasing after dividend or am I chasing after capital gains? You're in the market for either of the two. Get dividends or add capital gains, because nothing stops you from selling even if you are looking after dividend. Then they check the price movement, and this is where most of us go wrong. Share is going up. That's when you are chasing it. This price is, it's like just what happens outside there. Let me give an analogy of Matatu. At one point, they hike the prices. It will stay for some time, but when the exchange price drops, it's the same thing at NSE. Those prices you are seeing going up, they will eventually come down. Do you still want to buy when prices are going up? If prices are going down, do you still want to chase with the prices or wait? So you identify, why is this price going up? If it is something that is long term, then you want to buy before prices go further up. If prices are going down, you need to know, why is this price going down? Is it something temporary? Have company fundamentals changed? Profitability, operations, are they on the red on CMA side before you enter? If the price drop and the reason is something that is long term, then you want to wait at the bottom, buy at the lowest price. If it is just something temporary, then you want to use GTD and keep on lowering slowly, then wait for the prices. If it is going up again, don't chase the prices. Use GTD at slightly lower price. This is when now you decide the entry price. And you don't need to do any mathematics. Don't be told by anyone you need to do CGI calculations to get the entry price. Entry price is what you can see. You have so many platforms that you can use. One of them is the apps. AIB DigiTrader. Most of the brokers have the same app. That app have screen where you can see the orders which have been placed. Now go to online portal. It has the graph which is showing you the movement of market. Using the same online, it has details of the total turnover for the day. That is the value of the shares that have been bought and sold. You have the foreign buys and sales. If you total and get the difference between the two, you get what the local fund managers then, as the common mwananchi, are trading. You can decide, is it the foreigners who are moving this market with for a lower price? Is it the local funds? You can always tell based on the on what you can observe without doing any deep analysis. Once you understand where your entry price, the next point is this price I'm selecting possible right now, or it will be within the date that is allowed by the broker? If it is a raw price, then you want to use something called GTD, good to date. You give it 1 week. Within that 1 week, price may come down, or somebody makes mistake, places a market order to sell and hits your price. So that's why now deciding entry price is very important. It could be you are targeting a mistake by somebody, or you are targeting that price drop. So the next thing is now to log into the digital platform, place the order, submit to NSE. Then monitor your order. This is where we go wrong. You don't have to be in the market the whole day. You can just be peeping once in a while. If you have put lower prices, you actually don't need to be there. You only need maybe later in the day, you check whether the order executed, get out of the platform, concentrate on what you are doing. If market is going up at that point, just amend the order, continue with your work. Unless you're a day trader, you don't need to be in the market the whole day. There are also alerts which you can put. I'm very sure even the online platforms which are outside there, there is like a stock analysis, tradingview.com, Yahoo Finance. I'm sure most of those platforms, if you have an account with them, they can allow you to even create alerts. And as a beginner, never rush in the market. Start small. Start with what you have. Be patient. Don't try to rush in the market. The hype you're seeing in the market, unfortunately, as I said in my group, unfortunately, it's not market driven. It's not market driven. Avoid hype buying. A good example, and once I log in, we will see that example, SKQ and Uchumi. Those shares are just being hyped for no reasons, and people will lose money. Let me check price briefly, then I'll just log in once we are done with this slide. Because my intention is not for you to lose money in the market, it's for you to make money. As you have seen, the trainings are free, even if they are not affiliated with any broker for a reason. KQ, I'll log in. There is somebody who said, this share will go to 10 bob. You buy this week. Right now it is dropping. It's close to half that price. I don't want to name names here, but the effect of a hype, most people assume when you make a statement out there, you drive the market. Unfortunately, no. There are people who drive the market, people who have shares. Like when you see Honorable Didinyoro making a pronouncement, or you see on the news, and you see that day the share is rallying, don't assume it is people who are coming in to buy such that they broke the price. No. That time, you find somebody comes in the morning, clears everything on supply side. You're left now to fight, having broke the price on one side. And it's not that people cannot place the orders. If let's say, like what has been happening when it is dropping, the offer side or the ask side have the prices and the bid side don't have, it doesn't mean people are not able to place orders to buy. They are only subjected to the lowest price, which is the lowest selling price. Either they buy that or they wait. And for them, they know because you're pushing the market, it will still come down. They withhold the orders. Still, the market will still continue executing. On the same KQ, I've seen another one who is saying it will go to 4 bob. People buy, it goes back to 12 because of restructuring. Then that time people can make profit. Unfortunately, for KQ, what is just happening, in this restructuring, the government is saying, remember, government have given KQ money all along. It's not free money. It's a loan. Even banks also come in and guarantee. They need their money back. How do they do it? Get somebody to buy the shares, they get their money back. But we are seeing restructuring in form of reviving CG aeroplanes, doing rebranding and everything. It has nothing to do with that. Government needs its money back. What do? Get a strategic investor, buy their shares. Over time, the government will keep on selling. At one point, that strategic investor will be the majority shareholder. What does that mean? Mandatory takeover. At that point, maybe KQ is trading at 3 bob. Will you prevent them from buying you out? You'll be left like Baburi. where some people decided we are not selling our shares. Then you are told we have removed it from NSE. Then how will you sell? It's the same thing with some of these shares we are playing with. When the worst happens, remember the government will have sold off its shareholding. They get their money back. And after that, somebody just decides it's time to take over KQ. Baburi was there. It used to play the same game until it was bought out. And we cannot stop the process. Again, let's look at Safaricom. Government have said it is selling its shares. Those people who have gone to the court, they are just wasting their time. The deal is already concluded. The letters in CMA side, they are already ready. They are just waiting for the court to say, go ahead, it will be signed. And the minute they are saying go ahead, you see a very big announcement. The regulator have given go ahead. They are just buying out time. But as they buy time, market price is still low, giving you still opportunities to get in. So what I've said in my presentation, opportunities. Before you get in, check what this company does. Is there opportunity? Safaricom is a very good opportunity. If you are looking to buy Safaricom at the lowest price, this is the time. Don't expect that price to go below that price again. If you're not buying when it is below 34, you'll be chasing it when it is going up. Forget about Uchumi and KQ. I know there is a group, as I said, there is a group that is doing that specifically. And it is wrong for people in the market to do some things. I won't go into details because I've seen this group have even gone further to impersonate people you know, people who are credible in training. You already know Robert Bojani. You have seen on Facebook posters trading with his name and his picture, but the company is not even, the name is not a Kenyan. That's why I'm saying there is a group, and I'm very sure one of the people might have fallen off with Abojani. And that group now may be doing other things. When you see, as I said, when you see the screen for gainers and losers, because on my platforms I'll be deleting openly. There are people who are being used. So don't chase after companies which don't have fundamentals. Uchumi. Already you have been told it is technically. I would want to see on the chart. You have been told it is technically what? And remember to put on the chat the questions for now, but I'll put microphone at the end. Let me see on the chat. Maybe I'm not audible. We were told it is technically what? And it is them who said, yes, insolvent. It is Uchumi telling you we are technically insolvent, meaning what? We are bankrupt. Ideally, they are unable to pay the loan. They have a loan. That anyone should be telling us openly, but CMA cannot come out and tell you that. What they are just telling you is, Uchumi have told you, we are technically insolvent. You have a chance to get out before the worst, because CMA will not give you a chance. And I'll show you what will happen when you try to sell the shares when CMA decides to act. So when you see people telling you to buy some of these stocks, do your analysis. Do your analysis. Like now, if you look at Williamson Tea and Capchorwa, those prices dropped. And there was a bit of panic and hype that it's because of the effect of the ongoing war and also tea prices. The price drop have nothing to do with that. Last year they gave dividend. Price dilution. That is dividend dilution. Price usually drops down by the same dividend amount. Even before 1 month is over, they had already also announced bonus. Bonus means you get 1 share for everyone you have. Meaning what? The price has to drop in the same ratio. So that price drop had to do with dividend and bonus. Meaning what? Williamson, Capchoro have given you a good entry price, point. When the price goes up, you can decide to sell even if it is in future. It is you to make decision. Have I made enough profits? Can I take them? But when you're selling, always ask yourself, will I buy back the same share? Am I willing to buy at high price? So these are opportunities where you find the market have created an opportunity which you don't need to do any analysis, just by what you can see. Basically what you can see out there. So when you're deciding to choose a company, don't try to do a lot of analysis. Like now, a good example, Equity Bank, the price is going up and there are people who are chasing it. Equity Bank, and you have been told this price will go to 80, 90, even 100. But how far is the book closure? What will happen? KCB is there, it closed its book, prices dropped. So basically, before you chase a price, ask yourself, why is this price going up? Equity Bank, people are chasing after dividends. As you chase the dividend, remember there is a group I said previously that is purely in the market for capital gains. That is foreigners, foreign funds, and also local funds, Akina NSE and the rest. They are not after dividend. They compare dividend yield against capital gains. Whichever is high is what they take. They have to give you those returns. They also have their own profit they need from your own investment. So what do? When you're chasing prices up, they keep on letting you push. At one point, they start selling, prices drop. So before you chase a price, always ask yourself, am I chasing a dividend or am I ready to wait for the next year's dividend? Like KCB, you can buy right now. It's around 69. And you can target even a lower price if it continues to drop. Instead of chasing equity, which is already 70 what? 76. Highest 77. And you're chasing a 5 bob dividend. Yet the same KCB, which you can buy at a lower price, a difference of close to 10, you can wait for this close to, is it July, August there? They will be announcing an interim. Why would you chase a dividend right now while you can buy at a lower price, buy a lot of shares, wait for the next dividend? So let me log into we'll start with online portal. We just go through online trading portal for AIB, but the portal is the same for the brokers, all the other brokers. Let me share entire screen. So that is the online share trading portal for AIB Access. Account opening is very simple. I will show you. Let me first go through the platform for those who are new. Then we go to the app. Then we come back to the presentation. So we have said once you open the account, you are funded. You can always find the funds that are available funds or under the funds transfer screen. I don't want to go to the details. Now we have the companies which are listed at my watch list. All these companies are the companies which are trading at NSE right now, up to the last one. If any is missing, you can always add. You can always add to the list. On the left side, on the right side, sorry, where there is a cursor, there is this screen that is split into two. So these are the orders. Bids are the people who are buying, offer is the people who are selling. At far end, there is the graph. So you need those three screens first. My watch list is the one that have all the shares. You have the screen that is split into two. It's called market depth or order book. It has the orders for each share. Then you have the graph to show you how the share is performing. So you have come in the market, you have realized, I want to buy shares. And you want to choose a company to buy from. The first thing is first quickly scan through the market. See the direction of the market. If everything is red on the where there is arrow pointing up and down, you don't want to first place the order quickly because it means the market is going down. If all are green, it means the market is going up. You need to know why is the market going up. With that, you scroll these watch lists slowly. to the last part where you see foreign buys, foreign sales, and turnover. Those columns are together. Turnover, foreign buy, foreign sales. Foreign buys is foreigners who are buying, and it could be foreign funds or an individual. Foreign sales is foreigners who are selling. Again, foreign fund, a fund manager, or an individual. Then turnover is the whole market, what it has done. So if you are to take foreign buy, foreign sell, and you add, you subtract from turnover, you get what the locals are doing. So you're able to tell, is it the local who are driving the market or foreigners? Once you identify, that is a case where either market is going up or down, you have identified who is driving the market. If it is the locals, you need to know the cycles, because locals will go through cycles. If it is foreigners, then you need to know, check news. What is happening out there? Is it something that is affecting foreigners? That's why they are exiting. Once you identify that, the next thing is now to come and check the share that you want to buy. Let's say right now I've identified ABSA. I've known ABSA, maybe they are doing an innovation, maybe in future, but the price is going down. It means, yes, the price is going down, but they have something they are doing in future. What does that mean? Price may go up because of demand. Or maybe they have given a dividend. They are to announce results soon. And there could be something temporary affecting the price, that's why it's dropping. So you would want to get in at this moment. So you click on the ABSA on my watch list to load the orders. Again, check the prices the way they are arranged. On the bid side is from the highest to the lowest. On the offer side is from the lowest selling price to the highest. The next thing is identify the quantities. Check the quantity. Just scanning. You're not doing any mathematics. How are the quantities? Which side have higher quantity? Like now, outside you find there are more people willing to sell than buy. And that tells you why there is that red. Because there are many people willing to sell. They are pushing the prices down. No? So at that point, would you want to buy at that one? No. Would you want to buy even at 30.90? No. You come now to the graph. Check the lowest for the day. It is here. 30.90. 30.80 is the lowest. That is for one day. You do 1 month. Check, this share have been going up, it is going down now. Is there a likelihood of that share going even further down? That you can tell with 3 months. It has been sideways, up and down. And this is where now you decide, I better wait for this price to be confirmed. It can be confirmed by what? By the screen you can see here. The quantities. Like in this case, you notice the support, it's called support. Support is where the price is preventing, the price where quantity is preventing that price from going further down. And you have very huge quantity. Like now for ABSA, based on the online, you can see the 14,000. But if you look on the mobile app, you might realize the other quantities down. If you come to supply side, we have resistance, price that is stopping, the quantity where price doesn't go up. That one you have already have 52,000. So at this point, you can easily tell this price will go down. There is no point of buying at that one, that 30.90. You can just come and decide, because from 3 months, it's like it's starting to go down. I can easily even go below the today's lowest. You put a 30.50, give it a whole week. Basically by just looking at the graph. Let's take BAT. BAT again, first scan on the side of foreigners. It is the second one on the queue. There is no foreigners even for ABSA, but it is still early. 1 p.m. Still early to say there are no foreigners because they can come ahead. But from morning to now, there is no foreigners on BAT and ABSA. That tells you it's the locals who are pushing this price. What does that tell you? Either they are chasing after dividend, or there is a possibility there is panic selling. Maybe people who have already made money. So you have identified there is no foreigner. The next thing, orders. You can easily tell. Right now, the support is at around 570, where there is 6,300. That's why there is a huge quantity that is buying. If you multiply, it's around 300. Is it 300,000 or 3 million? BAT doesn't do those huge quantities. So at that point, that's where there is support. On the supply side, 11,200 quantity, that is way too high. So the price can't go above that. So basically, even if the price is going up, it's just playing within the same range. And you can see that within the graph. You can see the range it is playing. It's not that huge. So for this, I would go even for lower price around 570 or even lower. Because if you do 1 month, the price is actually dropping only that at one point it looks like it's going up, but this share is on dividend. So basically the people who are driving this price up are people who are chasing after dividend. But again, look at the last quantity, 7 shares. They're the ones which are driving the share. So basically it's just scanning without doing so much work on analysis. Don't try to struggle as a beginner to understand those terminologies. Take time. At one point, you may realize you are better off scanning the market than struggling to understand akina PE ratio, PG, and the rest. Those ones, they come as you start trading. So the next point, once you identify the share we have said, place an order. You just click on buy, B, that is the screen for order entry. Instrument type, just leave it as normal. It doesn't have any effect because these days you can buy one share to whatever amount can allow you. Security is the share that you are buying. Quantity is the number of shares. So you put the quantity that you want. Then we have limit. Limit is where you put a price. You are limiting your order to a price here, like 540. Your order can't execute at any other price. Either market comes down to that price, that's the only time order will execute. Or you put market where you're saying just go and pick any price, and that means it will come immediately and execute at the current selling price, which is 575. If it is not able to fill your order, let's say you had put 1,000, it goes to the next price, 577, takes the quantity. If it's not able to fill, it goes to the next price. That's what is called steerage, where you are executing your order in so many multiple prices, clearing prices up. And that's how now you drive prices up. If the order is not fully filled, maybe you have cleared everything on the price side, the balance is cancelled because it doesn't have a price. And that's where market to limit comes in. Again, you are saying, go and pick me the best price. 575. If you're not able to fill my order, don't go to the next price. Convert the balance on the bid side with the price I bought at. So 574 is pushed down. 575 comes up on the bid side for the remaining quantity. That is market to limit. So market to limit prevents you from doing spillage. Market is when you want shares immediately, but remember, you might be overpaying unless you're chasing the prices before book closure. But you can see the prices, you can always quote the price, so there is no need of using market or market to limit. While you can use the limit, put your price, say 540. Since my price is way low, I can't leave it validity as day, because day means order is valid for that day. That's where now GTD comes in, where you are saying my order will be valid for the number of days I put on the calendar. So it is valid up to 25th. Every day it is the broker to refresh, it's not me. Very early in the morning, they are the ones to submit. My work is just when I have free time, I come and check. That's where GTD comes in. Why? In between, somebody can make mistake and you hit the lowest price. Meaning, market opens in the morning, all these prices we can see 574, 573, they are not there. Maybe it is you who have been submitted the first one. 9:30, remember market orders starts coming. Somebody is selling at market, they will hit your price, execute, market stabilizes, goes up, you have gotten your shares at low price. That's why I always advise limit, low price, GTD in a date of 1 week. You never know when somebody will make mistake. Then we have IOC, immediate or cancel. So when I submit my order, quickly get the shares. If you are not able to fill my order, cancel. Then there is fill or kill. Immediately I submit, Get the full quantity, 63. If you're not able to get, just cancel the order without executing anything. Then you have delivery. Delivery is the one that is tied to T plus 3. When you buy today, you wait for 3 days to settle for you to sell. Intraday, however, is where you can buy and sell the same share BAT the same day. Remember, in normal trading rules, you are not allowed, but intraday allows you. I can buy BAT right now. If it goes up, I sell. If it goes down again, I buy. Remember, the broker is giving you credit and shares as you trade. But this is where the trick is. At CDSE, the intraday is not known. When the broker submits the orders, the executions, CDSE will check. Did you have shares when you bought shares? Did you have additional? No. They give you now the shares that you have bought. Yes. No, they are usually called, they are not balance free. So you can't sell them that day. It is a 3 days, but remember the broker you did your transaction. They check. You did a sale. Did you have shares? No. They also put it as not settled. Then at the end of the day, they will check. Peter had how many shares? Had 1,000. But he did all these transactions. We are not able to tell whether these shares have actually settled. Remember, you are trading with somebody else who have put maybe delivery on the other side. That time CDSE will not send transactions based on what you have done that day, and they debit from the shares you have, whatever you sold. That's why when you do intraday, you find your portfolio valuation have a difference. And you have to wait for settlement. So that the shares that you bought, they are settled, they are added to what you have. The ones you sold, they are deducted from that balance all the way until you get full valuation. So when you're doing intraday, always know between that day when the market closes all the way to settlement, you will see like there is a discrepancy. So wait for settlement. Remember, intraday, if it doesn't execute, if let's say you buy today and the sale doesn't execute, tomorrow it is not valid. That's why it is intraday. The following day, the shares revert to normal settlement. You can only sell on settlement. Then you have the buttons to buy and sell. That's just a quick overview on the platform. Once you submit, you get a breakdown of the charges. And the order goes straight to the market. For those who may want to open accounts, on the face of the online portal, there is open your trading account. Fill in your details. If you have an account with another broker, always add it. Click yes, add that CDSE number. If you don't have, just leave it no. Referral code, unless somebody have referred to you, make sure all the details are correct. We have noted in the market that some of the brokers, when you submit the first name and surname, and you omit the other name, they proceed to open account. If you have 3 names, you and the CDSE account are totally different people. Yes, Peter Chege Mogo and Peter Chege at CDSE are totally different people, even if ID is the same. You'll be forced to close that account, open a new one, they transfer shares. Always check. Take owners, get on to your broker, confirm the CDSE account the way it is opened. You can always tell with the statements that you receive, even from the broker. If it has 2 names, confirm properly. Make sure it is captured 3 names. Date of birth, make sure it is correct. These others you can always change. ID number, unfortunately, if it is wrong, you have to swear affidavit and other documents. So make sure you give correct details. For mobile number, make sure it is registered to your ID under M-Pesa, and I maintain under M-Pesa, not the mobile number. Why? There are those phone numbers that were registered by our parents or our sister or brother. They give us. Then government says you need to register the number. You went and registered now with your ID. Remember, M-Pesa is not under your ID. When you are paying, you won't be able to get that payment. When dividends are paid, you will not receive. Because under M-Pesa, the number does not belong to your ID number. So make sure that M-Pesa is registered to your ID number. And it's very easy to know. When you go to M-Pesa agent, which ID do you use? If it is not your ID, then the M-Pesa is not yours. So always use M-Pesa that number that is registered under your ID number on M-Pesa. That is the most important. Bank details, they should be your bank details and they are correct. Otherwise, you need to fill a form to amend CDSE details. So that is on the online portal. Let's go quickly on mobile app. This for those who are just new on trading. Then the next one, we are going through building the portfolios for different amounts. Let me just connect my phone quickly. This is just to get along those who have been asking how do I trade. But I'll be doing full videos, and I'll be sharing this on my YouTube channel and also TikTok. In a way, you can easily follow them. Around this. And if you have any question, put on the chat. I'm just logging in to the app, then I share screen. Waiting for it to load. Again, we go through quickly, because I said you need both of them if you are looking to make money at NSE. Otherwise, if you rely on one platform, you will be losing a lot. Let me skip that, refine none. So you have dashboard that just gives you an overview. Invested value is the amount that you have put in. Current value is the value of the shares. Then there is gains and losses. If you now invest in global funds, this is not global markets. This is special funds like Mansa X, but with our access group. Fund transfer is just how to deposit. Get insured is if you want insurance with our partner. So dashboard just gives you a quick overview. When you deposit money, you know most of you, they go to funds and also portfolio. On the 3 bars, there is a statement. This is where you can see how your funds have been utilized. Ignore my account, it has a date. This for training. If you want to see anything that has happened to your money, this is where you see it. And you can go all the way, I think, to 2011, if I'm not wrong. Even here, this is where you see all the transactions and the exact prices you bought shares at. If you want to know I bought shares at what price, statement, you can see sale of 1 GLD at that. If you notice the price that is shown at the end, it's not what I bought at. Oops. I'm using real phone. I'm not on simulator. I'll call her back. If you notice, if you multiply the quantity times price, it doesn't equal to the amount at the end. The amount at the end includes commissions. And this is what now is shown in portfolio valuation, the amount that you can see there. So if you go to portfolio, let me go back to dashboard. If you go to portfolio, the price you see there is average cost. It includes its average price. That is on the column for average price. It includes cost. So there are 2 different prices. Statement price you bought share at, also that. In portfolio valuation, that average price includes cost of buying shares. That is commission and levies per share. so that the invested value you see there is inclusive of the costs. Then you have the current prices and then the profit and loss. That is on portfolio valuation. Funds is where you can deposit money from using deposit. You can deposit using M-Pesa. Bank. For bank, you go to our bank, deposit to that account, put your CDSE number, send that confirmation to our finance. If bank is able to take email address, give our email address so that we receive and automatically post. If you want to withdraw, you can always withdraw from this screen. That is when you sell. I'm just going through quickly. So now we come to the important screen, watch list. Again, the same thing we did with the portal. Let's say I want to see apps how it is performing. I just click on it. Remember here you can't make more decisions compared to the online. Notice we have not seen anywhere there is foreign buys, foreign sales. Let me go back. There is no other additional screen. It's just last price, change, high and low. So if you need the other additional details, they are on the online portal. So if you click on ABSA, it will give you now the market depth. On ZD, it's called order book. It's like where the orders are recorded. You can view more. This one of the difference is. Remember on the portal you saw around 5. Here you can see all the orders. Now you are able to tell where support is. Like now, as I said, support it is at 14,075. That is quantity at a price of around 30.50. But I can still go lower. If you look on the supply side, we have 39 still at the top. Meaning what? That's why you are seeing this share going down. Because resistance is at the top at 31, support is at 30.50. So the app allows you to see additional. Let's see another stock. Let's see which one. Let's go to Co-op. Again, notice the resistance is actually not, the support is not at that 145. It is way lower. There is 54. At around 54, 200, around the price of that 120. On the resistance side, it is at 32. Ideally, this is a share that is playing around that price. Even if it is showing the price is going down, if you look at the quantities at the top, they are very small. That's what is pushing the prices down. So you want to check where is the resistance. Remember, resistance and support. On the portal, you can only see up to 5 prices. You might think the resistance is actually what you are seeing, but if you expand further, you actually realize could be the prices are even lower and this share can go down. So that's why you need our app. Come check the way the orders are placed. Go to the portal. Check who is driving that share. Is it foreigners or is it locals? If it is local, then you know it's either us as the retail or the fund managers. Then go to the graph. Confirm the price direction. 1 day, 1 week, 1 month, check how the share is performing. Then go to all high, check whether it is the highest price ever or the lowest before you enter. To place the order, don't swipe. The call coming in. Sorry for that. So when you want to place the order through the app, you just click on the share. You have seen the prices and you have selected the price. Let's say I want to place again at 540. I'll click buy. Again, the same screen we saw on the portal. The share, instrument type, it's always normal. Then the quantity, the number of shares you are buying. Then limit is where you are putting a price. Market is where you are saying go and pick me any price. It doesn't have the price. You have validity. On the app, you only have 2. You have day, where it is only valid for this day, that is 21st, or GTD, where you know you can change the current to the date you want. Let's say you want an order for 1 week. Then delivery and intraday is the same as the online. Again, you submit and confirm your order. So that is a simple walkthrough for those who are new. I don't want to go into details. I'll be doing separate videos now going into details, including how now you select prices. And I hope I have covered most of the introduction for those who are new. If there is something I've missed, I want to go to the next part, because I think that is the easiest way to explain NSE. And remember, put the questions. Just a minute, I take a cup of water. So I take all the questions at the end, so don't worry. For joint accounts, that one requires you open account using the manual forms. There are two forms to fill in. One is a broker form, and the other one is CDSE form. A joint account, for those who are new, is where you open as two people. Either you and your wife, you and your dad, you and your mom, you and your brother, you and your sister, or you and your husband, or you and your kids. I wouldn't advise you and a friend. If you fall out, you are locked out on those shares. That's why I've said a trusted family member. So you can use that, especially where you want to do joint investment. However, we also have minor accounts. They're opened as also joint, where you are opening an account for somebody who is under 18, but they have a birth certificate. You can start investing for them. On last training that we did on building generational wealth, which I'll be continuing now this weekend, you can start investing for your kids as more as when they get birth certificate. When they turn 18, that account is transferred to them. They become the ultimate beneficial owner, and they can start now investing. But however, you can still continue investing for them until such a time you feel it's worthy passing that investment to them. Remember, shares, they go nowhere. You can always pass over to the generation. At one point, when that kid reaches, let's say, 20 years or 24, and they have left campus, they are ready to settle. You are passing maybe a portfolio of 1 million, giving them a dividend, maybe say 100,000 a year. That kid has already settled. You have created a future for them when they were young, and you don't need a lot of money. You start with what you have. So that is another form of joint account, where you're opening a minor account, but it is you operating it. We also have company accounts. We also have company accounts. For the online portal, let me share the link. It is there on our website. AIB. This is for AIB access. For the other brokers, just check on their online portal, on their website. They could have given the links. So that link works for AIB. Same username and password for app. So I was saying you can also open an account for company where you invest using company name. That's the only time I would advise you invest with a friend, because it is the company that owns shares. Whatever happens in the company, you already have minutes and constitution for that company if it is as a constitution. If it is a chama, you already have a constitution. If it is a normal company, then you have the operations of the company and how they are dictated. So if you are planning to invest with a friend, use company. You can open a company account, and there is also chamas. You can open, if it is a registered chama. If it is not, then you open as a treasurer and chairman. Though we highly discourage, because again, as members, you are tied by your chairman and secretary, because they are the ones who owns the shares at NSE. So let's continue. So we are done with the basics of investing. choosing company, you have said you want to buy APSA, maybe you have done your own analysis, you see APSA is good. You have checked the price using both the app to see support and resistance. You have gone to the online portal, you have seen who is buying and selling, whether it's foreigners or locals. You know who is driving the price. Go again to the graph, see whether the price have been going up or down. Now identify the price that you want to place. Now you use the app and the graph to determine a good entry price. If the share continues to go down, you can always adjust. Once you decide on the entry price, place the order, submit. The next thing is just monitor. Don't try to raise with prices in NSE. You will eventually lose. That's why you find you have continually bought shares, but you're not seeing the gains. Why? Because you're just chasing the prices. If you want to see gains, always decide good entry points. If you after gains, profits, you have to sell. Don't expect your portfolio valuation to always be green. My friend, one day market will drop and it will all be red. That does not mean you panic. That is the time to add. There is something called DCA. I don't want to go through it today. I'll go through it Saturday if you have a session. DCA, dollar cost averaging, is where right now when prices are up, you're just buying small quantities. When prices drop, you buy a lot of shares. You're actually pushing the prices that you bought it high very low. You push your average price down. Always try to maintain prices as low as you can. Before you get into the market, ask, what am I chasing? Is it dividend? Is it something that is happening with the company that this price will never come down? Or will this price go up then come down? Always check. You end up buying at high prices. Prices start to go down, your profit margin reduces. Remember, there is nothing Peter can do. Even if I'm in the market, I cannot change the prices. Even NSE, they can't change the prices. You have to accept the fact. Where prices move, that's where your portfolio moves. If you're in good profits, you can always decide. It is your shares. You can always decide, let me take profit. But when you take profit, you sell, accept one fact. You have to wait for that share price to drop, whatever time it takes, or move to another share, or withdraw money out. However, if you are purely on dividends, never even check portfolio valuation for gains. You will end up making one mistake. You quickly take dividend, you also want to sell because the share price is going down. You end up selling at a loss. If you're chasing after dividend, first of all, account for dividend. All the dividends you have received, account for them. Now come to your portfolio valuation, add those dividends. Now check your performance. That time you can tell whether you're making money or not. So for dividend, always check, first of all, dividends, account for them. Then come to your portfolio valuation, add. Now, before you buy additional shares, always check, how is my performance? Will I push my prices up? Am I willing to take that? If not, check, which other share don't I have and it has dropped in price? Add that. As I said, nobody should tell you should be having 5, 10, 6, 1 or 2 shares. You can have as many shares as you can. It's all about the returns, and that's where we are coming next. It is based on the amount that you are putting in. If you are putting small amounts, there is no need of spreading that amount on so many stocks. You're actually doing yourself injustice. If you're putting a lot of money, that time you can even take as many stocks as you can. You're spreading your risks and also spreading your income. Remember, every share price moves on its own. And it's not fixed. It can move either direction. Even a sector can be affected quickly. And maybe that's the time you need money. Will you sell the shares at a loss? So when somebody tells you you need to have 5 shares, ask yourself one question. And I think this is where I know I get into trouble with so many people. Outside there, I said there is a broker who is waiting you. to charge you commission. NSE, they're waiting to charge you levies. CDSE levies, CMA levies. Brokers have agents. They are waiting to earn commission. They have to tell you to buy and sell quickly so that they earn commissions. These agents these days, they have gone a further step, which I think it's, I don't want to call it unprofessional, where now they are using influencers to even tell you now buy and sell. Remember, when you're doing that, it's them who are benefiting, not you. That's why I said always check. What are you doing in the market? What are you targeting? Are you making money? Ahead of it, is there something that is coming to your phone or your bank as dividend? If it's not coming, then you have to sell shares. Otherwise, how are you making money? Profit in your portfolio valuation, that is paper profit. Prices will go up and slam down, you are in a negative. That time you panic, you want to sell at a loss. So before you make any decision, always ask yourself, this person who is telling me to buy and sell, does he have affiliation with that broker? If they have, they are earning commissions. Before you make any decision, look at the angle, what you are paying. Because you have to factor for it in your portfolio valuation. All costs, they are included in your average price, and broker cannot remove, because you have to give you the correct profit. If you want to see the price statement. So basically, always check those two things. Let me pick this question. Elaborate on resistance and support again. Support is where demand is preventing the prices from going down. It is supporting the market. The prices should not drop below that. It is the highest quantity from the top on the bid side. So you start from the top, which is the highest quantity, the next highest quantity. And highest in terms of, you have to do some small mathematics. Quantity times price is way too high. If it is way too high, then that's where support is. Ideally, where price can keep on hitting, then going back. Then resistance is where supply is preventing the prices from going further up. The price hits there, it goes down. Again, the highest quantity times price. It means the market may not go up or lower than those 2 points. Again, there are some details you don't have on your head, but you can always tell. On the online portal, you have splits. You can always tell. On my side, I have everything. On your side, you only have splits, which means what? Without those splits, you can tell that huge quantity. Is it 1, 2, 3, or 10 people? If it is one person, it means that is somebody who can cancel the order the same day. You don't want to place your order even above it. If there are many people, then chances of them canceling, they are minimal. If you want the shares, you want to buy at a slightly higher price, or you put a GTD. So basically, that's how resistance and support comes in, but I'll be doing in the next one. So let's go to the next screen. Again, just basic terms for those who are new. Shares, stocks, you are owning a company. You are becoming a shareholder of that company. When that company makes money, they decide to share profit with you without you selling. That's where dividend comes in. Income paid to shareholders without selling shares. Or you can decide, this price have gone way too high. My portfolio valuation is in green. I'm in a profit. That's what is called capital gains. And you have to sell. Capital gains, if you're looking for it, you have to sell. Dividend, you don't need to. So if you're in the market to chase prices, you have to buy and sell. You are a trader. If you're investing long term, dividends, but when prices are way too high, you can always take profit and reinvest back. Then we have seen bid and ask prices. Those are buy prices versus the sell prices. Volume is usually number of shares traded. That should never worry you unless you want to go into further analysis, which we do the coming Saturday. So then we come to how you build your portfolio. We have different incomes. Peter with 1,000 and Peter with 10,000 and Peter with 50,000 and Peter with 100,000 and Peter with 1 million cannot invest the same way. Don't be lied. Peter with 1,000, Peter with 10,000, Peter with 50,000, Peter with 100,000 and Peter with 1 million cannot invest the same way. Peter with 1 million can buy everything in the market and spread his risks. Peter with 1,000. If he tries to do that, he's buying one share of Safaricom, one share of Eveready, one share of BAT, one share of whichever. How will I sell without making losses, even if price goes double? There are commissions to pay. What about Peter with 1 million? He can buy 1,000 shares of BAT. He has 60,000 in dividend. If that share just moves the 10 bob, he can sell. Again, this same Peter has bought the shares, let's say, of KPLC, 10,000. He has equity, 20,000. Because his income allows him to spread across many stocks. The Peter with 1,000 have to accept one thing. I have to build my portfolio slowly with my 1,000. And you can build a very good portfolio even with that amount. As long as, first of all, you are consistent and you are not chasing prices. You are looking for opportunities. So for a small capital, what you do, just take 1 or 2 shares. Don't try to spread too many shares. Yes, portfolio will be in green, but then when you sell, that green is fully utilized by commissions. Then what are you gaining? Again, when you are withdrawing, the bank and M-Pesa is waiting for you. You are in a loss. So basically with small amounts, target just one stock, stick to it. But when there is an opportunity, that is, let's take a good example. I've decided I'll be putting 1,000. With this 1,000, I can be buying, let's say, BAT every month. Those are 2 shares of BAT every month as I build that portfolio maybe to around 50,000, maybe to 50 shares. Dividend is around 3,000. Once I reach that level, I can go to another one, build. As I build this BAT, maybe when I'm at share 10, number 10, Safaricom, they announce maybe the sale, price drops. Do I still continue building BAT while there is the opportunity? The next 1,000, I can decide, let me first add a few Safaricom with that 1,000. As I build my BAT again, there comes another opportunity. I add, but I won't go to so many opportunities. I take like 2. First build those. But remember, I have to target my BAT to a good level. Once I build that, I come to Safaricom, which I've added, build it to another level. That way, you are not spreading your small amount in so many stocks. You are first building a stock to give you returns, which you can tell people these are good returns, because a 3,000 dividend can always buy another stock. So again, you have created an income that is building you another stock. As you build now the second stock, the first one is buying another stock. Build the second one to some good level. And this point, if you're doing small amounts, you have an opportunity to play even with the market. When the opportunities price go up, sell, take profit, you can move to another. But don't try to be a trader, because eventually there are commissions you are paying. So for small amounts, please don't try to buy so many stocks. You're just messing your portfolio. If you have medium capital, that time you can decide, let me pick 3 to 5 stocks across different sectors. And these stocks make sure 3 of them, they are very good dividend stocks. Build them to some good level. Once you build them, as you build the other 2, which could be opportunities, and when other opportunities come in between, also add, but make sure the 5 or 3 you have picked, you have built them to somewhere they're giving you good dividend, or those share number are enough to give you good returns. If price moves, you can easily sell and make profit. Let me give you a good example. You buy just 100 shares of Safaricom. You buy another 100 shares of equity. Those shares, they move with the price of 1 shilling. Even if you sell, these 100 will be taken by commissions. Equity the same. What if you take your Safaricom, build it to 10,000? Even if it moves with 1 shilling, that's 10,000. Even if you remove commissions, you have already 9,500. So basically, always look at the number of shares. It's what determines your returns. Build your shares to some good level. If you're targeting the good dividend stocks like BAT, Akina Stanchart, Stanbic, buy to some good number where you can multiply and see this is a good dividend. I've given a good example, BAT. If you have just 50 shares of BAT times 60, already you're waiting for 3,000. You can go to the next one, build it to some good level. Don't try to chase with the prices. Wherever there is an opportunity, always slip in, take a few shares. Then when you are done with your core stocks, come and build this one. Otherwise, when you try to split those small shares, you never see returns in NSE. You end up being frustrated by NSE. Yes, you see greens, but try to sell. Those greens are commissions and withdrawal charges. At the end of the day, because there's something we don't do. We don't account for the money we are putting to see when we are selling whether we are getting returns. If you're in large capital, diversify as much as you can, and make sure for good dividend stocks you have them in huge quantity. And here, this is where you sit down and say, all shares at NSE that are buying are dividend stocks. You avoid speculation. Then, for all levels, there is something called opportunity stocks. That is like gold, which you trade with. If you're able to stay around, right now it's around 5,700. At the lowest, if I was to buy, I wouldn't buy at 5,900. Even lower than that, I know it's easier to get. Try and get some of those prey stocks that you can easily sell at a high price. What do I mean? Even if you have small capital, medium or large, make sure you have at least 1 unit of gold. That when it goes up, you can take profit. Aim buying at low price. Put just leave it, or you can even put a GTD order. Gold is an ETF, exchange traded fund. Only that it falls under commodity, not an ETF for shares. This gold, right now, it's trading at around 5,700. Assuming you manage to place an order and you buy at 5,000. No broker should tell you it has a minimum of 10. ETFs don't have 10%. Any broker putting that is actually limiting you from taking advantage. You come back once it executes after it settles, put a sale order of the highest price and forget about it. You can put 8,000, you continue and put a 1 week. Keep on refreshing that order until such a time when you're serious, you want to take profit and maybe it has gone to 6,000. That time you can adjust or leave it. Why? If you look in the last 3 months, there's somebody who made a mistake. Is it 3 months? 6 months? While the share is trading at 5,000, in between there is somebody who managed to buy at 3,500 and it went back to where it was because of a small mistake by another investor. Don't make those mistakes yourself. Take those opportunities. That's why I said gold is if you're able to get the lowest price, buy as much as you can, hold them. You'll be the one supplying in the market. You'll be the one dictating the prices. And that time you are taking profits. So for large capital, make sure part of it goes to, they are called defensive stocks or capital prey. We'll come to that, where you play with the money that you're putting in. Then make sure you have good dividend stocks. With this capital, you can even now, you have the opportunity even to risk if you want to go to Akina Uchumi and KQ. But remember, you are risking. With small capital, don't try. Medium capital if you want to stress. Large capital, remember, unless you want to lose money, play with the market. But make sure you have good stocks. I've gone through them previously. I'll go through them because of time. I don't want to go through all of them. But I hope now you understand. Small capital, go for 1 to Strong stocks, grow them, target dividends. And of course, if you can, add gold there. 1 unit is enough if you're able to get at raw prices. Medium capital, 3 to 5, always make sure you have gold. Large capital, most of dividend stocks, make sure you build them properly. Target those. Then the others, the ones which give raw dividends, those ones you can decide they are just for playing with the market. And when opportunities arise, you can add them. Don't try to chase with the market. Then as you buy shares, always allocate across sectors. Don't try to go to one sector. Have some shares in banking, telecommunication, manufacturing, energy, and others that are in NSE. But always check how are those sectors performing. Insurance sector, you need to be very careful. These companies, they are affected by claims. If you buy those shares, you never get dividend. And if they give, it is very small. CIC, Kenyari, how much are they giving? It's only Jubilee. And Jubilee Insurance, I think Jubilee as a company, much of their business comes from investment side, not insurance. And also their private, their parent wing that is outside the country. So even if you're investing across sectors, check what each sector does, so that you don't fall into some sectors, then you are locked. Why do you need to diversify? A sector can easily be affected. Banking sector, it only requires government to introduce a tax that is affecting them, policies that affect them. What will happen? Prices drop. Maybe that's why you only have shares. They're in lead, will you sell? And maybe at that point, that policy is helping now Safaricom or manufacturing side. That's why you need to diversify. And always balance your risks. If you want low risks, go for dividend stocks. Because first of all, they are stable, but they have slow growth. You find some of those stable dividend stocks in NSE, you not find prices fluctuating a lot. Because they are held by people who are in retirement. They take dividends. If you're high risk, then go for volatile, high growth potential. In NSE, you don't need to worry. It's not like international markets. Some of these prices, even if they keep on fluctuating, they will always come down for you to get entry points. When they go up, exit. So if you're high risk, that time you can be trading. If you're low risk, concentrate on free cash in form of dividends. Always start with what you have. Again, we are not all equal. Start with what you have, build through. There are people who have built good portfolios over time, reinvesting those dividends. Then diversify just to spread your risks, and have some stability and growth stocks in NSE. Growth stocks are those that give you price growth, where you're able to buy low and sell high. It's not company growing, it is your portfolio. And grow your portfolio over time. So before I come to this, let me take a cup of water, then I believe we are not far. Let me see how many slides are remaining. Maybe a few more, then we come to Q&A. Let me take a cup of water. So let's continue. Dividend yield versus capital gains. And this is where most of us go wrong. So as I said, when we are starting, there were two ways you make money. Through dividends, which is income, or through growth. That is the money you put in the capital gaining. You need to understand how both works. Dividends, it's company paying you part of their profit as a shareholder for being part of that company. Paid from profits. But remember, these profits you need to interrogate further in the books when they are releasing results to know whether it's being paid from free cash flow or from a debt from money rolled over from last year. You need to always check that because that shows whether that dividend will be sustainable. It can be annual, that is once in a year, like Equity Bank. They are paying just once, the next one will be next year. It could be interim, that is, they are paying based on half-year results, then they will pay another one, or based on quarterly results. So there are companies that do that. They pay like twice, like KCB. That's why right now, if you have to ask me, do I buy KCB or equity? I would go for KCB. Price is low. I'll be getting another dividend soon. That time I'm getting dividend for KCB, equity price have dropped. I buy equity. Instead of chasing equity prices up, you get dividend once. You wait for the next dividend next year. That price can't go further than that. Don't be told it will go to 80s. There is no formula in NSE that can predict the price the share will go up at. Because there is no way you can predict demand and supply. Those are assumptions. When even as AIB, when we are telling you buy, target price is this, it's assumptions. And some of those assumptions, the reason why we usually end up getting into that recommendation is because right now, when Equity was announcing results, I would have easily told you to go to 70s and 80s. Because you push the prices as you chase the dividend. It has nothing to do with calculations. It's the same thing like Safaricom. I'm telling you, buy now. When that court case ends, it you got 40s, that it has nothing to do with mathematics or company. It's purely what I can see. The price is controlled at this level. When you release it, it will go up. There is no formula that can tell you where the price will go. It's all about what is happening in the market. Now, capital gains, profits from increase in share price. You buy and underline sell high. If you don't sell, then you're just watching prices in the market. So if you're after capital gains, you have to sell. If you're after dividends, you don't have to sell. So the key difference between the two, dividend is where you're just getting an income every now and then without selling. Shares are still there, prices are moving. Capital gains, price appreciation, and you have to sell. And you have to sell. So when do you focus for dividends? One, when you want regular income, that is, you want to be buying. As your money grows, you're getting regular income. Here you look for stable stocks and defensive stocks that are not easily affected by price movement. Also, when you want still income to come during uncertain and slow markets, BAT will still give you dividend even if the price goes down. You'll be waiting the next time the price goes up. If you want to sell, you can sell. When then do you focus on capital gains where you are chasing prices when market is growing? Like now, those people who bought at 2024 when prices were way too low, they have decisions to make right now. Whether to take profit or leave it there as paper profit, but continue accumulating dividends. It's decisions, it's painful decisions you as the investor needs to take. Because once you sell, you have to accept one thing. What price do I come back at? Or when you're targeting high returns, that is, you are comparing shares against money market or special funds or bonds or international markets. And you have realized NSE can give me good returns. Instead of going to all these others, then we go to NSE. Or when you can handle price volatility. And this is what I was saying on the group. If you are coming to chase after prices, always be ready. Always be ready and accept one fact. When prices go the opposite, you don't panic. Because when you panic, you start selling. Don't chase some of those stocks. However, the best strategy is where you combine both. You mix both income and growth stocks. Because everybody wants to make money. As you grow your portfolio, even if you're using small amount, I said when there is opportunity, buy. When that share goes up, you can sell and continue building your core portfolio. So dividends, when they come, don't use them. For the first few years, reinvest. If you're targeting retirement, actually reinvest all the dividends up to retirement. Trust me, in your retirement, you not need anyone to employ you. You have flow of income. And that's what everybody is looking for. At one point, those shares without selling, pass them to your beneficiaries through a will, or when you're not there, they can go to court. The court gives them the letters of administration. Whoever is appointed, they know what to do. They can decide even before you go, let us share this portfolio equally. If you are not able to agree, we open a trustee account or a company account, move shares there. Never let shares be held by administrators. Those are individuals, 2 or 3. I said about joint account. People can go against you even if they are relatives. Always put them under trustee or a company. They just a company, even a business name, come and move the shares there. When you agree, then that company can distribute. Dividend will still be coming in that company. That company, maybe you are also using it for other investment. It is helping the company, the family, instead of 2 or 3 people broking other beneficiaries. It all depends on the way the family is. But we have seen so many cases here. So I'm talking from experience. So when you pass over the shares to the children, they continue growing. And that's how most of millionaires at NSE, including Akina Didi Nyoro, they have grown to where they are. So dividends, free income, capital gains, you're chasing growth. And always combine the two. So we come to capital prey stocks. They are called growth opportunities. You find so many names. But this is where you're aiming for price growth. You buy low, sell high. There are only 2 stocks in the market that you can do that easily with low capital. One of them is GLD, gold, Absa Gold. The other one is BAT. Those shares, they move with the good prices. SMWF, however, it used to be in that category until the spreads. The spreads is the difference between the top prices narrowed. That way, that share doesn't move a lot. BAT, it can fluctuate any time. That's why when you see it on red, never panic. 1 minute it can be the lowest and you are in red. The next minute it is at the highest and you are in green. That is one share I always tell people, when you're buying, never panic when it is red. Any minute, any second, it can always turn green and red. GRD, aim at buying at the lowest price. Accumulate as many as you can. You'll be the supplier at highest price. Unfortunately, this training is coming when the prices have already gone up. But target lower prices below 5,400, buy so many units, target to sell 6,500. That's 1,000. Have like 10 units, that's 10,000. Move that 10,000 to another stock, return the same amount back to gold, get you another 10,000. It is helping you grow your core portfolio. That's how you play with the market. So growth stocks are stocks that have strong price movements. They look also at the valued or companies that are recovering but have fundamentals. Hapa you have to be very clear. Have strong fundamentals and shares which can be volatile in terms of price movement. It's not Akina Uchumi and KQ. So what does that mean? When you're identifying undervalued opportunities, check the shares which prices have dropped. If you're looking for other shares, not the gold and BAT, those ones, they are stable. But those shares fundamentals still hold. But again, if you're looking for any other shares that have not included among the 2, you have to buy a lot of shares. Also check where there is market overreaction and prices have dropped, but not speculation. Like now, KCB have already dropped because of dividend. As people try to chase equity. So you sell KCB, you go to equity, you push the prices down. That time enter KCB. Now take that analogy to KQ. I wouldn't tell you to buy. I told you when we are starting. That one you are actually playing. Also, where sector is recovering. Like now, tea sector, Capchoro, Williamson tea. I won't talk about the others. Prices have dropped. And we know it's being affected because of the war that is out there. When this sector recovers, prices will just go up. When they announce dividend, because they give good dividend, prices will go up. You can decide to take profit or take dividend. When you are buying share, not just even at the valued opportunities, even other shares, always avoid buying shares at peak price. When shares are the highest, like KQ, I saw people are buying it 7, 8. And I ask myself, what is that person doing? So what price do they expect to exit? Right now they are going to have the loss. Uchumi, there are people who are chasing it thinking it will go far. Now it is going down. These are shares you don't want to play around with. Avoid buying shares at the highest, buy at the lowest. And always check the fundamentals. They are very important. Don't try to do a lot of mathematics. Those ones I said we leave. There is a reason why I say that. Always look where prices have dropped or where people are trying to buy more but prices have dropped. And don't try to buy all shares at once. Prices may also drop further. Always try to, if you're buying in huge quantities, split order into two. One higher price, the other one at the low. If you're able to get the two, better. Then you also need to know how to manage risks on these stocks, especially the ones we are playing with. First of all, don't go all in one stock. That you won't just go and buy Safaricom. You have not even checked the prices. Buy small units as you check what is happening in the market. Then if you're in for capital gains, set your target profit. If you're in for dividend, then you already know how much each pays. You can do some estimation and see whether this is a stock I can hold for dividends in the future and how many shares I need to have grown for it to give me good dividends. If there is a change in trade, prices may be dropped and company fundamentals change, always be ready to exit even if it is at a loss. Don't be rocked with a share that you can't sell. So then we come to how you build a strong investment portfolio. This is one how you combine everything we have run so far from the time we started. You have to have a structured investment plan. Don't just come and buy shares. Always combine dividend and growth stocks for opportunities. Go for different sectors and always align with your financial goals. Why? There are people I can't tell to buy BAT, ABR because the religion does not allow. There are people I can't tell buy shares which give interest because their religion doesn't allow. And always when you come to NSE, think long term, not short term. We did building a generational wealth. This time, I think this Saturday I'll be doing family wealth to show you how you can grow your family, not just the generations, but how you can invest as a family, targeting generational wealth. Focus investing consistently over time. That's the only time you can grow your portfolio. It's not just even putting amounts at once. All dividends always reinvest. Add more funds as and when you have. Don't try to struggle as and when you have free cash. Add. Then when do you buy? During the dips, when prices drop. That is the time to buy, not when prices are going up, unless you're chasing dividend. or there is a reason why prices will never come up, down when they go up. When there is a value in that company, don't just buy any share. When there is hype, always avoid. You end up buying at high prices. When hype ends, you go back to where you are, and that time you may be counting losses. There are times when you don't want to sell or do anything. Like when company fundamentals are strong, those prices will be way high. It's not the time to sell, it's time to wait for prices to go up. Only buy if the prices, you are sure prices will never come down. When there is temporary market drop, never try to sell your shares. You'll be selling at a loss. That time hold. Or if you are targeting dividends, then in terms of selling is when you are targeting your target profit have reached, or when fundamentals change and company may never recover. That's time you want to get out early. And if there is a better opportunity, maybe you don't have enough funds, you are in a profit, you can always move to another share. Some mistakes to avoid: hype and rumors. As I said, we have so many groups which have come up. You need to be very careful. The information you see there, don't just consume, do research. Don't put all your money in one stock. Then panic selling when there is a drop, unless it is a share that you know you are speculating, then never ignore research at all. You also do your own research. And with that, we come to Q&A. Let me take the questions on the chat, then I will allow microphone in a few. Let me quickly go through what have been posted. Yes, boards I will do tomorrow, and I'll base it on the ebook, so that for those who bought the ebook, it is still up for purchase. If you still want, you can let me know on the comment section. I can share that link. We'll go through it so that you understand the boards from the basics. So there is a question: I buy sell shares online, an account is credited and debited with the shares the same day. Where does T+3 come in, or does it not apply to all? On trade date, the broker moves the money from your account to something we call CDSE suspense account, a holding account. We don't pay directly to CDSE. Then the shares are credited to your CDSE, but you cannot sell them on the same day if you use delivery. If you use intraday, that you can do, but remember the following day you can't sell them. Now, where T+3 comes in, if you buy today and you want to sell tomorrow, you can't. You have to wait for 3 days. If you sell and you need your money back today, broker cannot pay you. You have to wait for 3 working days. Why? CDSE have to receive the funds on the 3rd working day to pay the broker who are selling, so that they can release the shares now to the broker who was buying. That's where the T+3 comes in. Credit and debit shares move the same day, but they are not available for you to use until T+3. So that's a comment on Uchumi. Rental income was 8 million, but that is not their primary business. That's a warning. Again, they have a liability of 7 billion. I don't know how they will pay. Even if you sell Uchumi and you sell the shareholders, I don't think we can pay that role. No? The best thing the lender can do is just to put it under receivership. Hopefully that doesn't happen. But that is the direction we are headed. If that happens, suspension. If you want to know how suspension works in NSE when share is suspended, let me know at the end. You can post that comment. I will show you how it will work. I already have a share that is suspended, one share. I can show you. Let me see. The market will not have closed. Is Mumias or insolvent? Mumias was put under receivership by the lender, that is the bank. I think it is KCB. but they are no longer in operations. Every time there is somebody who is trying to revive a court case. So unfortunately, that is a position and it cannot be removed from NSE until shareholders and debts are paid. What is the meaning of split? Split is a number of orders that make up the quantity on the screen for the online. Link for online, that one I've shared. Opening junior account, joint account, I've explained that's a manual process. I'm trying to log into AIB account, but I'm getting access denied. Either account is dormant, or if you just opened an account is not processed, your application was rejected. You have my number there, just reach out, I will check for you. Just share your ID number and make sure you just put a message so that I know what I'll be checking. I bought BAT shares last week with GTD 567 from my portfolio. After execution, the price is 577. I think that I've explained. Portfolio, the price you're seeing there, 577, includes commissions per share, levies per share. If you got grant statement, it has the price of 567. So the portfolio price should not even worry you, because even if you buy more now at 500, that price will still drop on portfolio valuation. But the exact price iko kwa statement. Resistance and support, I think that I've explained. When dividends are paid, are they sent to the phone number on my broker account or to the bank account registered to CDSE? The bank account or the mobile number registered at CDSE. When you open the account, there is something called dividend disposal, whatever you give there. If you change in between, it is to the new mode. Always check with your broker. They should be easily give you. So what you gave when opening account at a dividend disposal. If you changed in between, then it is the new mode. Splits I've already explained. Please repeat a walkthrough of where one can see offshore buy sell on the platform. On the online portal, my watch list, there is that screen with a lot of details. You just scroll to the, is it to the left? You scroll that screen, there is some hidden data below beyond BNS. You just scroll, it is there. Foreign buy, foreign sales. If there is no many questions, I can briefly show you. Hey, will Kenyari ever go beyond 4 shillings? Well, this is pure speculation. Kenyari, the reason why it went from the price it was to where it is because it was added to MSCI Frontier Index for small caps. So foreigners had to come and buy. We decided we want also to buy with them. We pushed prices up. They sold and left. I'm not sure whether they still hold that stock. But hopefully in future it might come back. Kimani Mwangi, just reach out. That screenshot says there is an application on our side. Either you already have a CDSE account or there is a pending account opening process that has not been processed. Just reach out on my WhatsApp. I will talk to customer service and have it processed. Lowest Absa gold price to place on GTD. Let me log into the platform. I quickly check for you. But market is closing. Let's see the prices for today quickly. I'm just logging in GRD. It is 595, the lowest 59.40. Today was not a good day. Let's see tomorrow, but 5,700, 5,600, but with a GTD, because if you look at the bid quantities, they are a bit small. I will come to that. Let me first take the Q&A. BAT is often referred to as a dividend giant. If retirees dominate as per your explanation, how sustainable is this stock? There are still people who are buying it for trading. Most people who hold it, yes, they are in retirement, but there are others who are buying right now who are just speculating with the price movement. That's why It's a bit volatile, and it is good for if you're looking to make quick gains through price movement. Because of that illiquidity, the spreads are a bit wide. That is the difference in prices. It can easily fluctuate. So you can easily target low prices, sell at high price. But again, these mostly is for dividend. Did you say Safaricom might not drop any further? There are likely chances it will not. We are now waiting for the court case by Sonko. It's the one that have dragged the process. By right now, the court would have given its judgment. Once that is done, then prices will be on free mode. What's your suggestion for 5 strong dividend shares apart from BAT? We have, let me go to that site. It's called stockanalysis.com. I don't want to share the screens because of time. It's called stockanalysis.com. Let me just share quickly. Which one is this one? I'm on stockanalysis.com. Just when you open stockanalysis.com, let me share that link. I've shared the link. You go to stocks, it will open like this. Expert stocks, go to stock screener. When it opens stock screener, there is somewhere you need to change from US to Kenya. Let it open. Once you change to Kenya, it loads NSE shares. Okay, it doesn't take time. Yeah, it has loaded. Where it says exchange country, we change from US to Kenya. Still taking time. You search for Kenya. Mine is because I've used it before. It loads the shares. Yeah, Kenyan shares. You only need to click dividends. I need to clear. Let me clear filter so that it removes all the filters. So you have 61 shares. You just need to go to dividends, arranged by dividend amount. BAT is the first one. Stanchart, Stanbic, Kakuzi, Jubilee. You had requested 5 BOC, but now these prices are high. That's where Kapchorwa comes in because the price is low. EABL, DTB, ignore Umeme completely. Umeme remove it, but that is in terms of dividend amount. What about dividend yield? That is the returns based on the current price. If you are to buy at the current price, ignore Umeme completely. We have BAT. That's why I said BAT is the dividend, is usually the dividend king. Whether you do dividend amount or dividend yield, it will always be top. Baburi, remove it. We have the second one. And I've seen people asking, do I sell Kengen? Don't try. Kengen is the second best dividend stock in terms of returns. If you are to buy at the current price, the dividend you are getting, the returns are high. Then Cooperative Bank. And the reason is dividend is a bit high, price is low compared to other stocks that are giving the same dividend. There is BOC at the current price, BKG, but then BKG you need to be very careful because dividend when it is paid, sometimes these days they say we are foreigners. Then you have Stanchart, NCBA, Stanbic, INM, Equity. That is in terms of dividend yield based on current stock price. Remember, dividend yield for you could be different if you have existing shares. You need to divide the dividend against your average price times 100 to see the returns on dividend. I hope I've given you even the resource for dividends. It's only that I don't want to go into details of NSE because there is a lot. It's not just what the prices we see. There is a lot. I think we have done BAT. Interested in ebook? Let me take that link. There. Let me get quickly the link. So there is ebook for shares. I had given it for free. If you're already on my groups, just check. There is also one for boards. I'll be adding more. Pension and the rest. So you can get them there on that link. And I'll be adding more. So splits, I've said it's the number of orders that make the quantity on that price. Because there are many people who are placing the orders at a certain price. So those orders, when they added together, they give you the quantity. Then NSE can show you now the number of orders. Dividend yield formula. Researchers giving different outcomes on different stocks on online. So there are different ways you can look at dividend yield. Do you have the shares? If you don't have the shares, then you are basing it on the current price. So it is the dividend amount divided by current price. Like if it is BAT, it is 70, the total dividend annual divided by the current price. Because that is assumed if you are to buy today. What if you have shares and you're not buying? Then it is dividend amount over your average price, because it is returned based on your shares that you hold, the average price. If you already have shares and you are adding, that's when it becomes complicated. You have to do the average price based on the shares you have and adding more. Once you get that average price, which is just the current shares times the price, get the total. The shares you intend to add times the price, get the total. Get the total that, then the total number of shares, divide to get the average, the new average price. Then you come and divide the dividend times 100. I know out there, it's because out there it is theory that is circulating. When it comes to NSE, I said practicals are different. It is all based on what you have. If you don't have, then it's what you're seeing on stock analysis. If you have, then it is different. Can one edit details of registration? When you open accounts, the only way you can edit those details is filling in a CDSE amendment form, CDSE 1B form. That one you have to fill, and broker may require you to fill the additional form. I'll be publishing more books. I know the boards one I would have given for free, but somebody broke my heart because he shared with my friend, and he charged that friend, and I felt, why? So I'm doing some things here, and others are also selling. Only that friend was open to me. They told me, well, I received your book and I nearly paid. But I'll be doing more. I want to make all the investments as simple as possible. Very simple, including a tiny can invest easily, even in international markets. Is it correct that next rotation will be mid-tier banks and undervalued insurance stocks in Q2, Q3? Not really. Q2, Q3 banks will be announcing results. And basically, the price movement you are seeing is all about foreigners, foreign interest. Most of the banks have been added on MSCI Frontier Index. If they release good results, most of foreigners would want to buy, but they also check the prices. Are they too high? Most of the banks have announced their dividends. Price will drop. So even if they go up, it has to be with the same drop they drop after dividend. That's why I said in my groups when I gave the recommendations, but I'll be sharing this now, even out there. Right now, don't chase the dividends. Those prices are way too high. You wait for the adjustment, you buy shares at low prices. Target next year dividends. On AIB Access Portal, on Invest in Global Funds, are you connected to Mansa already? No. This is connected to our parent company in Mauritius, Access Groups. Access Group have their own funds, like in Axiom, Africa, and the rest. Those are the funds you'll be investing in. But they work more like in Mansa X. Shares versus special funds for long term, it's all about returns. Shares, they don't have limits in terms of returns, but always split your investment into different assets. Shares right now could be performing well. When interest rates change, bonds will become attractive. People will move to bonds. When interest rates again become more attractive, people will move to special funds and money market fund. So always balance. When like now shares are good, come and invest a lot. When things change, you can decide to go to bonds, but still continue building your shares. Has Kenya Dividend declared when the pay of dividend? Not yet, is subject to approval. Subject to approval means you as the shareholders will be called for an AGM and confirm that the company can go ahead and pay out the dividends. Let me show you something. I can see, is it the last question? What's Kenyan dividend payment? Kenyan, they have already done. It is usually around December. That's when they announce their results, because they close their year in June. Most government entities close their year in June. So expect the dividends rates, December payments around January. November, December, that's when they declare dividend. Then their January, February, expect the payment. I want to show you this calculator. On the mobile, I'm still working on the mobile version. On the computer one, it is working well. On the mobile, it might look sketchy. You know the advertisements? When you want to buy shares for dividend, you need to calculate the dividend amount. You don't need to do that. The calculator have done everything for you. You can specify whether you are local or foreigner. For us, we are charged 5% withholding tax. Then the stock, they are here with the date they are closing, all the stocks and those which have closed. If you are waiting for payment and you want to know how much you receive, you can always calculate. Let's take BAT, and maybe I have 100 shares. 100 shares, I can always click calculate, and it gives me the exact amount that I will receive. It is here. The gross, the tax that will go to government, the 5%, the net that will be sent to me. And I need to have bought 3 shares before or on book closure aids me. Now, if you take a different stock like KCB, which is about to pay, or IMH, let me see, KCB, hopefully the books, it's awaiting payment. That one won't give us a good example. I'm looking for a share that will pay. Let me go to the table here. I will come to this table. I want a share like ABSA. Let's take ABSA here. ABSA, and I have 10,000 shares. I calculate, it will give me 17,000, and I need to have those shares. But again, below here it says, ABSA Kenya dividend, I can easily reinvest. Ignore the advertisement. These are shares I can invest my dividend in. I only need to check dividend per share. Am I willing to move my 17,000 to Equity Bank? Because the book will close after I get the payment, or NSE, which is giving that dividend, or Jubilee, or DTB, or Kakuzi. And you have even the book closure for each and the payment day. You only need to use the same calculator. Let's say I've decided I will invest in equity. I can come and calculate how much I will get in equity. But again, I don't have the number of shares. I know I will receive 17,000. I can use another calculator down here. This one, it's called Dividend Invest Calculator. See, I know it is 17,000. I need Equity Bank. I'm receiving 17,000. Current price of equity is around, let's give 79. Broker is charging me that commission. So the number of shares I can buy are how many? It's actually here, 211 shares. And it tells even me the net dividend now I can receive after I reinvest my dividend from ABSA. We said what? Reinvest your dividends. And it is there, it tells you reinvestment guide. You can invest in equity, bank, and purchase those shares. That's when I receive my dividend for ABSA. Now we come to the table for upcoming dividends. It has each dividend, the date it was announced, the amount. Book closure is the date you need to have those shares. The calculator have gone even ahead to tell you even the number of days that are remaining. Those which are subject to approval, they are there. And when the dates are announced, I will add. The ones which are saying pending, it's because the book closure is not confirmed. Then the payment day is there. So you are able to tell everything in the market without having to struggle. And all these, they are available for free. I've given the link on the chat. And these are personal initiatives. I want to support the market as much as I can. I was the brain behind the IB Digit Trader. So again, I want to move further step, make sure all these things, they are actionable. So there is a question, at what point do we enjoy our wealth after accumulation? On a lighter note, it is you as the investor to decide. If you dividend ikikuja, even if I've said reinvest, you have an option of deciding, let me take some. But remember, at your retirement, that's when you have dividends coming in. So the dividend, it is you to make decision whether you want to use them. Remember, there is a retirement that is waiting you. So when they come, you only need to make one decision. How is my retirement looking like? If you want to sell shares, you can always sell and take some profit. Nothing stops you. So if you want to enjoy, but one question, many years down the line, how do you want to see your children? And enjoying it could be for a short time, but then we all want our children to have the best of their life. So you look at your retirement. These shares can support you in your retirement. You are not investing every coin you have. When you receive even your salary, or if you are self-employed, there is that part you always enjoy. For dividends, first reinvest. At some point, let's say within the next 5 years, if you're investing properly, you might even decide the dividends that come after that, I can always enjoy them. When share prices go way too high, you can decide to sell a few and enjoy that profit. It is you as the individual. There are decisions you need to make, but always remember those decisions have direct impact on your investment. With that, I want to allow, that's it, remaining, we can go up to 3 if there are no many questions. I've enabled microphone. You can just unmute and ask the question. If you still want to put on the chat, you can put on the chat. Uwaja ni wenu, just unmute. You can unmute, ask the question. Hey, mumenyamaza. Ask the question, ask the question. Hakuna swali wrong, even if it is not related to NSE, just ask.
Hello.
Yeah, how are you?
I'm good, Peter. Thank you.
Okay, welcome. You can proceed.
Personally, I'm Master Lee.
Okay.
My question comes to, first, I'm still a beginner, and my question is, I'm still having a challenge on during to buy when buying those shares at
Okay.
the buy and sell platform pale at the NSE. So taking an example of yesterday, I was trying to buy equity, then I procured with the lowest price, and then thereafter it executed. Then at the portfolio valuation, then I saw it's a lower price, profit loss, it's negative something. So I'm still confused from that end.
Okay, let me share a screen here. You can see the online platform. Huh?
Yeah,
Are
I
you
can
able to
see.
see? Now let's go to portfolio valuation. It is here. This price you see here, the average price, even on the app, it always includes the cost.
Okay.
So when you buy the shares immediately, remember the market price have not moved. When we add the cost, like let's say I bought at 30.90, on average price it will show maybe 31 or 32. So that difference is what shows you the loss. It's because you have just bought, we have factored in the cost of buying one share, because average price is cost per one share, including the levies and commissions. So you have to wait for the market to go up, the prices to go up for that to turn as a profit. You don't need to worry. If you have just bought, actually you don't even need to worry. If you have stayed with those shares for some time and the prices is still in negative, and that company is actually doing well, that is the time you add even to lower this average cost. So for average price, it includes the cost. If you go to the statements on this end, it's shown you on the app. If you go to the statement, let me see if I can get a transaction I've done. If you look at all these, the prices I have here are the prices in the market. Like upside, it shows 25.50, 25.60. If you go to portfolio valuation, upside is different. Because in portfolio, it is average price. It takes all the transactions you have done, get the average price, including the cost. But in statement, you have the right prices. So I hope now I've explained. The negative is because of the cost.
Okay.
And
What
the
about
price have to, yeah.
the market price?
Market
Yeah.
price doesn't include because you have not sold. Remember, average price you have already incurred. Market price is the current price, but since you have not sold, we don't include the cost. You only realize it when you're selling. So when you're selling, you also need to factor in your profit. You need to factor the cost of sale. So basically, the profit or loss misses the cost of sale. Now, as I wait for the other question, I want to show you with there is a share here which I bought, cable, 100 shares. So that when you are playing with Uchumi, we know what we are doing. And KQ, I want to sell cable. Market is still open. It is here. I have 100 shares. Let me put cable. Sell. I want to sell my 100. Hopefully it is enabled. Let me see at 32. Sell. I have that. And I click submit. Hopefully I'm not logged in. Stock not available. Okay, I need to change this to 100 at a price of 32. Sell that cable. No, not this. Let me pick cable here. Let me add cable. Hopefully it is not removed. Cable. Add. We have cable here. You can see it is 00. So I want to sell my shares. I have 100 and decide even to sell it to Bob. Sell. Order limit. Let me sell at 1.8. Sell. Summary submit. Order placed successfully. That time you'll be crapping. Huh? Order placed successfully. You'll be crapping. Order placed successfully. Order placed successfully. But something else here. Can you read that message? Instrument halted or suspended. So when we are playing with Uchumi, that's what will happen. When we are playing with KQ, this is the message you get. And there is nothing you can do, even if you tell the broker to change. This is from NSE, straight from the NSE. So any other question? I wanted to show that. I think I had already promised I would do that. So when you are playing with the prices, let's be aware about that. Huh? Suspension, you won't be able to sell. And it can be done during trading hours. Huh? You have just bought, it is suspended. Huh? Another question. So there is one here. How can I confirm my CDSE account information? Just reach out to your broker. If it is AIB, you can reach out. Huh? I'll check for you. The broker can check for you. Then using portfolio you shown, the ledger balance is negative 40 something. This is different. This is a test account that I usually train with, but it is a real account at NSE. So I'm trading on credit, but you are not around. Then the final question before we come back. I opened my account several years back with Stanbic. This was a specific trading account, not a savings. Where will my dividend go to? Can I change this to say Equity Bank or M-Pesa? You only need to go to Stanbic. If it is Stanbic custody, you ask them to change in CDSE. They'll give you the form. You can unmute.
Thank you, Peter. That's fine.
Oh, I've answered your question.
Yes, thank you. So I'll just go to Stanbic, request them for that form.
Yeah, if they are the ones who have your CDSE account, they're the ones who are supposed to give you that CDSE form. Unless you have another broker, that another broker now also needs to amend.
It is because I've been trading now with AIB.
Okay.
But now I'm not certain because I don't think I've held shares long enough to be able to even think about dividends. I've basically been trading for capital gains.
Oh, okay. I think you can first check with Stanbic. Also reach out on my WhatsApp. I'll check on AIB side what you have.
Okay.
Yeah. If they don't mirror what you have in Stanbic, you can always ask Stanbic to amend.
Okay. So thank you so much.
Okay, welcome. Then there is a question. Baburi Cable KQ were once the best stocks. What's the trend? Cable is because they defaulted Equity Bank loan. They were put under receivership until they clear that loan. KQ, the only issue with KQ is mismanagement of funds, and also government keeps on bailing them. That is not free money, it is a loan. And you know it also accrues interest. It also some comes through the banks, and I think that's where the issue may be. And also in terms of usage, you know, we don't use KQ a lot. So in terms of even revenue, it's low. So until they're able to clear that loan, when KQ is on the red. Baburi, it was sold out. I think there is a company that bought out the shareholders. Only those who didn't sell their shares, they are still held. But there is nothing they can do. I don't know how they will get their money back. Then there is when I'm buying, I'm using the buy price or offer price. It all depends. You can use the buy price if you anticipate the prices will go down. Offer price or ask price unless you want the shares immediately. Then is 3.45 a good price to sell Kenyari? Let me check. Kenyari is going up. From what I can see, you can use a GTD. That is if you really want to sell Use a GTD of the highest price of 4 and leave it there. Right now it can give up to 371. Wait for the market to close because the highest it has gone is 346 and the arrow is pointing up. Wait for the market to close. You can sell from around 4. Just use a GTD of 4. As we said, we are capitalizing on mistakes of others. Unless you need that money urgently, use a GTD of 4 shilling. 1 week. Any other question? Question?
Good afternoon, Peter.
Afternoon to you.
Yes, my question is if I calculate the profits when I sell my shares in a certain company, it's higher than the dividend I'll get. So I'm asking if it is wise to sell or sell after dividend.
Okay, there are two.
Have you gotten me?
Yeah, I've gotten you. When you look at the portfolio valuation, it is in profit. But when you compare with the dividend you're supposed to receive, the dividend looks more than the profit. But remember, this is a company that you give a dividend next year. So if you sell today, there's a decision you need to make. If you're selling to take capital gains, we don't need to buy back that share. If no, then you can sell, because then there is no need of waiting for that dividend. However, if you plan to sell and buy back that share, remember you not buy at the low price. You only need to look at the company. Actually, which company is it? Because it depends on the company. There are companies I can't tell you to sell shares. Which company is it? Cindy?
Equity, BAT, and ABSA.
Yeah, those ones I can't tell you to sell. Don't sell right now. Take your dividend. You never get those shares at low prices. They give good dividend. And when they announce the next results price will go up. Q2, Q3, you can wait for that time to sell. You take your dividend first. Those shares have good dividend. I wouldn't tell you to sell. Unless that profit is way too high. But again, next year they have dividend. If it was something like Kenya Re, CIC, those ones I would have told you off-road. But don't off-road good stocks. You might never get them back at that price.
Okay, thank you.
And right now we have seen a scenario where instead of prices going down after book closure, price actually goes up. You might end up selling, then equity also goes up after book closure. You miss dividend, then question. There is a question, is equity likely to come down? Maybe after book closure, it might come briefly down like KCB, then go up. It will all depend on foreign participation and also ROCO funds. They're the ones who are moving some of these shares. But equity, if you look at it, both buy and sell side, it's always balanced. So that may tell you, it might not drop that much, but there will be a small drop. Is it a must to receive monthly statement from CDSC because I haven't received for the past 2 months? In most cases, you may find maybe you have not transacted. That's why they have not sent. But if you have access to portfolio valuation, you don't need to worry. CDSC maybe unless you are trading with multiple brokers. If you are trading with multiple brokers, you may need. Yes, question? If you're talking, you can proceed. Then there is a question. CDSC have not updated on my shares. I may want to know why, unless there is intraday transaction, that is buy and sell the same day. That's the only time they fail to road. Otherwise, all shares should be there. Maybe you can check with the broker. If it is AIB, you can always reach out. Please share where to see foreign buys and sells. Let me share that screen. Hopefully, I'm not logged out. Let me just share. It is on the online portal for the broker. If all of them look like this, it is the same. You see this screen that I'm scrolling? You just scroll this way to the end. Here they are. Turnover. There is foreign buy, foreign sell. So this screen you can always scroll. The one for watch list, my watch list, it has everything you need. So here you get foreign buys and sells. If you scroll down, you can see now the performance of those stocks. Na sijui kama niwapatie Mwakenya leo, nitakuwa najiexpose kweli. Let's go to this Safaricom. It is the lowest. It's the one at the bottom. Notice there is a 23 in terms of foreign buys, 23 million. In terms of sale is around 40 million. That could be one and the same person trying to trade amongst themselves. Then we come to that one, which is this share. KPLC again looks like 49 million, 51 million. When you see some of these things, don't rush to buy that share. It could be one person moving a share to the another person or to the other account. It has to be done through trading. And as I said, some of these accounts have zero commissions. So when you chase with them, you are chasing the prices. For them, they are moving shares without any cost apart from CDSC, NSE, and CMA levy, which is negligible. So when you see such transactions, always be careful. Don't race with the foreigners. Any other question? Then which counter would you advise to buy if have kidogo cash between Co-op and Escom? Just go for Escom. Escom actually build it properly. That price is still discounted. When government completes the transaction, Safaricom will be back where it was before it dropped. Oh, the old ones not updated by CDSE trading with different broker. Oh, then you have not moved. What you need to do, you need to go to the old broker, request for transfer form, fill in. They stamp that form. That means they have processed. They stamp your copy of ID. That means they have seen you. They give you both. You pay 200 shillings to CDSE. Send that form to the new broker together with the ID that is stamped. Then the message that you receive from M-Pesa, send it to the broker, the one paid directly to CDSE. The receiving broker will give you the pay bill for CDSE. After that, just wait for the magic. After a few days, you see the shares on your CDSE account. When you open an account with another broker, you have to move the shares through transfer. Any other question? What GTD price would you advise for Escom? Let me see, Escom. Escom, where it is, though the market is closing. Right now, the prices may look jabbled. From what I can see, 29.80. There is a very huge quantity at 29.80. 30 shares, that orders, 29.80, and that's where it has hit today. But again, targeting early morning prices, you can target 29.70, 29.65, but with a GTD of 1 week. Hopefully that court case is not determined this week, because then the prices will just shoot up. Any other question? But that is in terms of buying side, if you are looking to buy. Selling is different. That one you can always wait. Don't be in a hurry unless you need money. Yes, when you're selling, it's also GTD so that you get high prices. Even selling, always, even when you're selling, always use GTD, high prices. Don't try to place orders with the current prices. Always take advantage because that difference, the reason, let me tell you the reason why I always use GTD. That price difference is what pays commissions. So basically, when you're buying at a low price, it's like you're buying with the same prices that somebody is buying at the current price. But remember them, they also have costs to factor them. That means their cost goes higher than the current trading price. Ideally, GTD helps you factor the commissions. How do you transfer broker online if you can't access physical forms? That's done via email. The brokers should be able to process the forms via email. If a broker is not able to process, just copy CDSE because they will need to explain to CDSE why they are not processing the form. That can be done via email if you're outside the country or if you're not able to access the broker offices. How about recommended GTD for apps? Market is closing right now. Prices are jumbled up. It is going down. This one target below that. Wait for it to go to 30.50. Because today it was 30.80. So you can target that 50, but with the mind that you will need to adjust downward if it keeps dropping. Sometimes GTD is not executed. Do you place another after expiry? Yes. You can press another one and maybe increase the prices, but remember, what if the prices come down? Always keep on refreshing the order, especially if prices are going down, don't be in a hurry. If prices are going up, that's when now you decide to take a higher price. But unless you're in a hurry, prices will always come for you. So with that, I think we can adjourn so that I go and prepare now for boards training tomorrow. So we go through government boards in details. Last time I covered account opening, I'll just brush through it, but I would want to cover both primary and secondary market and how those prices are determined and how you, as the investor, you determine whether to buy from primary or secondary. Remember, if you come to Peter and not Peter, the Peter you can see there, My Wealth Guide KE. If you come to Peter AIB, I'll tell you go to secondary market. The reason why I would tell you to go to secondary market is because secondary market there is commission or money. If you see a broker who is telling you to buy from primary market, that is a good broker. Never let them down. Huh? A broker who is telling you to buy from primary market where they are not making commissions, you'll be very lucky. But if it is Peter now outside the AIB, know the prices you are paying at in primary and the prices you are paying at in secondary market. Because a board could be 100,000 in primary market, but the same board with the same coupon in secondary market you can buy with 90 or 95,000. You have saved 5,000 first of all. You still get the returns, that is the interest rate, the same way, the same for the remaining duration of that board. And again, you get your money back in the shortest time such that you can recycle that money back to another stock. That is secondary market. However, as a broker, because I know I might not get that raw price, I would try to go for a board that is above the market price. That is, instead of paying 100,000, you might end up paying 120. Out of that 120, there is my commission. And maybe that is the board that is trading and they have somebody who is willing to sell. So always compare those two when you're buying boards. Huh? That is the downside of boards trading, because secondary market, you have to go through a broker. Broker have to look for a client for you. So you are subjected to brokers' decision and what they give you. But it's because they know we don't do some of these calculations. So we go through that tomorrow. And hopefully now we continue extending these trainings, so that at least now you understand things from a basic layman way, where now you know how to invest. Thank you so much. Let's meet tomorrow for those who join. I'll share the links. Bye bye.